One. Matt Davio back at the 1 Minute Trader podcast, and I've got a very accommodating guest today, and that's Sean McLaughlin. Sean, we tried doing this last week, and I was technologically challenged, and I appreciate you coming back on. We don't need to bore our listeners, but thanks for coming back on. Tell us a little bit about what you're working on. You know, most people know you've left StockTwits and you're working on kind of getting back into trading full time. And, you know, you're an options guy. I'm a futures options guy. You know, what are you up to lately? How do you like a market that's got the highest short interest ever and hits new all-time highs once every couple weeks?
Well, to answer that question, you know, it's very tempting for people who have been in the markets a long time. It's very tempting to say, well, we can't go much further for all the reasons that you could think of, including what you just mentioned, the high short interest and you know, the global macro news that's out there just hitting us every day, whether it's storms and hurricanes or terrorism or the threat of nuclear war or whatever. I mean, everything we throw at this market in the last 8 years, just nothing seems to scare the market for longer than a few days. And it's so tempting to say, all right, we can't go much further. This is it. The top is here. But until otherwise noted, you can't go until you see proof that the top is in. And I'm certainly no longer in the game of making market predictions because I've proven to myself over the years that I know better than flipping coins when it comes to picking market direction.
Oh, I think flipping coins is way better than I am.
But for the first part of your question there, you had a lot there on that.
Yeah, I did. I asked 7 questions in one. I'm good at that.
You know, you said, what am I up to lately? And you mentioned that I left StockTwits, and that's true. At the end of January, I left StockTwits after a 7-ish year run.
That's a long run. So
yeah,
a lot of growth.
It was there was a lot of growth, and I was an employee there from not the beginning, but very close to the beginning.
Right.
By the time I left, I was the second longest tenured employee at the company, behind our president, not our CEO, but our president, Justin Paterno. So it was a great run, and it's a great company, and I wish them well. I mean, it was everything. We parted ways amicably, of course, and you know, I'm excited to see what they do in the future. It's
you know, I heard somebody say the other day it was Dalio. No, it was Leon Cooperman. I rarely watch Bloomberg television, and I was in the lobby that had it on, and gosh, what's her name? Oh gosh, anyways, the reporter on Bloomberg was asking Leon Cooperman, you know, who's one of the greats, you know, about kind of he's a macro participant, and she was trying to bait him. I guess he and Bill Ackerman have been battling, I guess, somewhere in the press. I missed that piece of it. But he actually mentioned in his answer that there are only
whoa, sorry about that.
15 years ago, there were 8,000 stocks, and today, even with all the ETFs, what do you think the number is? In the U.S.
stocks?
In the U.S. markets.
Something in the neighborhood of 7,000 now, right?
4.
Really? Wow.
So I was shocked by that. So let's talk about that a little bit, because I think real simple, I think where people get in trouble is the mechanics of how markets work. I mean, I mentioned earlier that we're at the all-time short interest. It's the same reason markets won't keep going higher when we have the all-time long interest. That's when you want to put on the type of position that because nobody believes the market can ever go down, and we're not there. So in that same sense, if you've taken the number of vehicles in half, the number of stocks, yet we're at all-time highs, being able to participate in more and more items has become more and more of a problem, especially if you're a stock manager.
Yeah, I'm surprised to hear that so many stocks exist. I mean, on one hand, I'm surprised. On the other hand, I'm not surprised. I mean, look at the IPO market. The IPO market's dried up in the last few years. I mean, you've been around long enough to remember what it was like in the late 90s when, I mean, it was seemingly every day we had 20 new IPOs. It was, I mean, that was one extreme. And I think now we're at the other extreme.
Right.
The medium, it's been a long time since we've been at that happy medium of stock replacement to keep the market fresh with new funds and new flows and new ideas. But you know, it's I mean, if you'll permit me here, this is kind of a good opportunity for me to plug where I'm at these days.
Please,
you know this, but maybe your listeners don't know. I recently joined Trade Ideas. Started working with them this month and helping them. You know, market their product and educate users on how to use the platform.
And just as a disclaimer, I was one of the initial beta users for Trade Ideas through my broker, who was he was one of the first guys to really offer a full trading platform. Like, you know, everybody has a full trading platform, but he really created his own back in the late 90s, because although I've always traded on a screen in those early days in the mid to late 90s, I still called in anywhere from 80 to 20% of my orders until it finally went to zero. But Trade Ideas, they had pitched Doug at X Solutions, that was the name of the brokerage, and he was like, you've got to use these guys because your ideas are so good in the stock world, but you know, this will help you find even more. And he was absolutely right. So Trade Ideas continues to innovate, and I'm sure that's one of the reasons why you've joined on. Why don't you tell us a little bit about, again, they've been around for 20 plus years.
Yeah, you know, well, it's not that long. I think they started in 2003-ish.
Okay.
But similarly, I too wasn't a beta user, but I was a very early customer of theirs. I was working for a prop trading firm that was based out of San Diego. I was in Chicago at the time, but the prop trading firm I was working for was based out of San Diego, and they were looking to open up a new shop or a new office in Chicago, which is kind of why they brought me in to help open up the office and build it and attract some traders and that whole thing. And anyway, when I went out to San Diego to meet with the team and spend a couple weeks sitting with their traders and learning what they do and all that, I was introduced to this little widget that would sit up in the corner of my screen right there. It looked like an AOL chat box.
Right.
Well, Instant Messenger was the thing that people used every day. And that's all it was. And it was feeding the traders at the desks. It was feeding them trading signals. Mm-hmm. And every trader at the office had it. And so they set me up with an account. And it was the earliest iteration of what we now know as Trade Ideas. I think it was called Trade Ideas at the time. I'm pretty sure it was. But it was a product that I came to use as an active intraday stock trader, and it was absolutely indispensable to my process. It was, it was so indispensable that while we were in the process of setting up the office in Chicago, there was technical challenges of getting computers set up in the right places and all that stuff. I mean, this is literally actually physically setting up a trading office.
Right.
And there were a couple days where I didn't have access to my Trade Ideas software to do my trading. So on those days, I just didn't even trade. I was like, I'm like trading blind without this thing.
Yeah.
So it proved its value to me very early on, and this was back in 2006. And lo and behold, here we are, 12 years later, and the company's still going strong, and they've iterated numerous iterations since then. And it's a really tremendously powerful platform that I'm still trying to wrap my head around. I don't even really know everything we do yet. It's kind of mind-blowing, but it's still reassuring to me to know that they still have a lot of those early features that I was using back in 2006.
Yeah, they've just made it
valuable.
So I know they're calling their new artificial intelligence system Holly, as in, you know, the Holy Grail, the Holy Grail, which, you know, I play on words and it's cute and everything. What do you think, you know, as new traders or traders maybe that are in a slump and are struggling to find maybe names in the stock world, why do you think a tool like this is so beneficial? As far as, you know, there is, I will still contend there is no Holy Grail, but there is definitely things that can help you to find motion, you know, at a time when volatility is extremely low. anything that you can do to provide yourself some edge to find volatility is a huge advantage, I would imagine.
Yeah, I kind of went off on this tangent because you mentioned how it's harder and harder to find actionable trade ideas with so few stocks in the market. And yeah, we're down to whatever the number was, you said 3,000 stocks or whatever. It doesn't matter. Even of those 3,000, there's really 50 to 100 names that are really getting 80% of all the stock market's volume.
And they're always rotating, right? That's the difficult thing.
The same 50 to 100 names that they get talked about on TV all day long, and they're talked about in the financial press, and everyone's watching them, all the big names we all know. And look, if you want to trade in that arena, you can, and there are absolutely people who make money trading those stocks, and certainly not begrudging them. Mm-hmm. But the one thing that Trade Ideas does is it's a machine, right? It's completely agnostic to what's the flavor of the day. It doesn't care what stocks are being talked about in the news. It doesn't care about who's got this stock on their watch list or whatever. It's quantitatively looking at data in real time across the entire stock market and serving you ideas based on based on stats that you're looking to monitor. It's
So the user then, based upon maybe experience or maybe a couple items maybe that they've thought they want to back test, or they can go back in and plug in, hey, if I've got a moving average at 10 and an exponential average, and I want to trade on a 60-minute chart, show me all the stocks that just broke out of reverse direction from going one way up or down, and then now it's reversed on the 60-day or the 10-day EMA, and the price has moved above, right? That type of thing. You can tell it specifically what to do.
Yeah, it's for those who are technically minded and have a knack for this kind of stuff. Yeah, you could build all kinds of crazy indicators custom to you that will surface the stocks that meet your criteria in real time. Mm-hmm. Now, if you're on the other end of the spectrum and you're maybe new to trading or new to technical analysis, and you don't really know exactly what it is you want to look for, well, Trade Ideas makes that easy as well. They have a bunch of kind of out of the box scans that any trader can use to surface stocks making new intraday highs or new 52-week highs or things like that. There's a lot of that. It's one of those products where there's a lot to learn. You're not going to learn it all in your first week, but if you spend time with it and maybe use a couple things that you easily understand, and then slowly build on that from there. Just like in trading,
right.
You can have a lot of success. But to finish our point about the lack of opportunity in the stock market, yes, the number of stocks are lower. But if you can leverage technology to your advantage in a way that, say, Trade Ideas does,
right.
There is still plenty of opportunity out there, kind of under the radar, that's not being talked about in the mainstream. And I see it every day with the Holly AI that we have, that's uncovering trades that, if these were positions that you got into and maybe apply a trend following strategy, Dom, you've got 50, 75, 100% winners over the past 6 to 8 months. It's kind of amazing.
It is. And the good thing about
this would be a sales pitch about trading.
No, it's okay. It's okay. I'm a fan of the product. I'm an affiliate. I mean, if people want to join, I actually affiliate myself because I don't trade stocks that often, but I like to run some scans occasionally to see what's moving. I like to see what sectors are moving and how broad the coverage is, and are we really going up, or is it kind of one, is it Apple that's taking up all of the NASDAQ right now, or is it Exxon and Shell driving the Dow 30, that type of thing. I want to kind of extract and find some divergences beyond what appears to be reality, right? And that's always what we're looking to do as traders, is find some type of little edge that kind of gives us a clue to the puzzle and allows us to maybe put on a position. And
one of the nice things too about the AI, just to for one final plug on that, is even if you're not trading stocks that you're finding through trade ideas or through the AI, one nice feature the AI has is it has 2 running counts that can run throughout the day that show the P&L graph of whether or not if you were taking trades and taking profits at predetermined profit targets and stopping out at predefined stop losses versus entering the trade and holding it to the end of the day. And it tracks the differences in P&Ls. And what that tells you is on a day, we call it risk on and risk off. So risk off is when you're taking profit targets and getting out of your stop losses. Right. And risk on is you hold the trade till the end of the day. And you'll find that on some days, risk on is outperforming risk off, which that means that's kind of a day where it's a trending day. Its stocks are, if you're getting into a position for the right reasons, you might want to think about holding that trade instead of, taking your quick, 25-cent hit or 50-cent hit. Hold it because there might be some legs in there because that's what's happening for a lot of trades in the market right now. Whereas if it's showing the other side where the risk off is outperforming, that's like kind of a quick hit and run kind of market. Let's take your profits and move on to the next thing and keep moving.
Well, this is a good point because I have always said that trend days are the most difficult to trade because if you're not involved, if you weren't, say, you didn't own Apple before it took off and started making a $3 run and the 3 turns into 6 by the end of the day, it never pulls back on these trend days. Like you're waiting and waiting and waiting. And they're the hardest, they're literally, unless you were involved, they're the hardest day, stock trading days, I think, to trade. And we're in a market now that we see more trend days, both up and down, than we do what I would call the normal trading day. The normal trading day would be, we go up and down and we kind of, settle into some value zone. And from there you can trade up or down. But we really, no matter how I look across markets, stocks, equities, or options or bonds, there's more and more. And I think this is because coming full circle to our conversation, there is less liquidity in this marketplace than ever. And I've actually read that in a different manner. The actual volume that is going on in the SPY and the S&P 500, even though there's more and more ETFs, is significantly less, like nominally, than it was any time in the last 30 years, or let's say a generation.
Well, that brings up a good point. We hear all the time in the financial press everywhere about how computers are dominating this market, and that's true, especially when you get into those 50 to 100 stocks that are commanding 80% of the total stock market volume.
Right.
What that's actually doing is that's creating opportunity for humans like you and I, actual people, to wade into these stocks that are out of the beaten path, that are ignored by the high frequency trading machines.
Right.
And if you're nimble and if you're skilled and you've got the right resources, you can really make a dent.
Yeah, no, this is exactly the direction that I was hoping you'd take the conversation, because I agree with you. I think that the opportunities are now for the smaller trader, and the smaller trader really could be anyone below $500 million. Your footprint now can be really so unnoticed in these types of names that you're talking about that still trade 1 million shares a day, but they're just not in the top 50. So the guys that are trading billions and hundreds of billions they can't play in them because the liquidity issue is there. And that's also why you're seeing a lot of these big hedge funds close up, because they can't put their money to work. They literally have a liquidity crisis and they want to get out. I don't blame them. They're going to basically push themselves aside until the volatility comes back into the market. And I can't blame. Like that's a real issue. But the smaller guys like you and me, don't have that problem. So this is still an okay time. I always tell people,
you reminded me of something that I've just thought of this just now, and it angers me. Is when I started trading in 1998, I worked in on a prop trading firm in Tampa, Florida. That's where I started. And it was a room full of, at its peak, it was 40 guys, a couple girls, but mostly guys. And we were all stock market newbies. We were all basically just teaching ourselves how to trade and teaching each other. But nobody was like an expert.
Right.
But the common prevailing wisdom that went around to everybody that came into the office and learned how to trade was spend time with trading the big name stocks. Like at that time, it was Dell and Microsoft and Cisco and
Oracle. Yeah.
Yeah, and the prevailing wisdom was trade the big stocks because that's where the volume is, that's where the liquidity is, and that's where you won't get hurt too bad when you're wrong. And on the surface, that sounded like great advice. That's how you can learn the mechanics of trading and all that. But at the end, after 2 years that I'd been there, and people were starting to make some real money there. If you kind of dug into the P&Ls of the guys that were really killing it, it's the guys that were trading these small, little, at the time it's the internet stocks were making all the money. So these guys were trading these little internet stocks that had 200,000 shares of volume in a day, things like that. These were the guys that were getting the huge wins. And, in hindsight, it's like, well, shit, because those guys learned how to trade on those small stocks where there was no competition, more or less. I glossed over it, but I meant to make the point that when you're competing in those big stocks at the time, was Microsoft, Dell, Cisco, Intel, WorldCom, just to name a few off the top of my head. That's where all the volume was, and that also means that's where all the professionals were. That's where Wall Street was. That's where you were competing. And so you're not going to win long term in that game. Maybe you can win short term, but long term.
Especially if you're day trading, right? You're making it even tougher because some mutual fund gets a big chunk of cash from a new pension that they got, and they've got to put, before the quarter ends, they've got to put, $200 million to work, which, like you said, all of a sudden in some of those stocks, even though they're liquid, their trader doesn't care. He doesn't care what price is. He's got to be involved immediately in that liquidity. So he'll take all the offers or all the bids, whether he's buying or selling the piece. And if you were a day trader, the guy doesn't know how to trade, right? He should have done it in pieces, but he doesn't care. And especially back then, there was more and more of that. They couldn't parcel off orders as easily. It was too much work. So the lazy man's way to do it was, take the offers, and that could take the stock up $2 or $3, right? And if you were shorting it, like you said, you just got your, handed to you on a silver platter. And then the next day it probably dropped $5 because they were out of the market and nobody's there. But those are the types of games that get played.
Yeah, it was a different game back then. I remember those days when you could actually see who was on the bid or offer.
Right.
It was Merrill Lynch and J.P. Morgan and Goldman Sachs and all those guys. And now it's
Bear Stearns, they're gone.
Yeah. Those were the days, man.
Yeah. So at the 1 Minute Trader, we're always looking to give one or two really solid, easy ideas for people. Whether you've been trading for 5 years or you've been trading for 5 minutes, what would be, if your son came to you in 15 years when he's 18 years old and he said, "Hey, Dad, I think I want to learn about trading." What would be foundationally the first item or two you would tell your son?
Well, I risk running off on a big tangent on this, so I'll try not to do it. I'll try to reel it in. But I guess I have a two-part answer to that. The first part would be, great. If you want to learn, the first thing you need to do is just read everything you can. Books, websites. I can recommend some smart people to follow. Just read. Spend a lot of time reading and learning, and just learn the language and learn the mechanics of the stock market, and then maybe start with a very little amount of money to actually get your fingers dirty.
Yep. Well, we've talked about, and then the next thing I'm gonna kind of be your dance partner here. So, and then how do you feel about paper trading versus real money?
I see the utility in paper trading, and I see the value for most people. But given the choice, I would rather trade with real money, but trade really, really small. I feel like, actually, I know. I don't think this isn't a guess. I know that the hardest part of trading is not coming up with a great strategy. It's not coming up with a secret gimmick of what works in the market. The hardest part about trading is knowing yourself and knowing your own limits and knowing how you're going to handle wins and losses, and that's not something you will ever experience when you're paper trading.
Yeah, and I think often, Sean, I don't know about you, what your thoughts are on this, but I tend to think that, emotions and psychology are either over-discussed or under-discussed. And what I mean by that is, and you brought up the point, now I'm going to say it a different way. I think how you deal with wins and or losses, right? You said that. And it's really the same thing. You should be, this is where, like, I think emotion can be good. Like, you can see how the market is reacting from some herd behavior. That's one way that you can benefit, like if you can see that clearly. But the other way is, how do you deal with success? Are you, out there thumping your chest, or are you just, hey, I took the trade, I knew what the risk was, it worked, I took my profits, next. Are you doing that? Which I believe is a skill that you have to learn. Mm-hmm. And in the same sense, I took the trade, I stopped out, on to the next trade. And don't ruminate on either side, right? That's really what I'm talking about here, is that you can't be celebratory. Again, go get yourself a milkshake or whatever your treat is if you had a good trade. But the other thing is, on the bad side, don't try to get it all back in the next trade necessarily, right? Don't go into it going, I got to make my money back immediately.
Yeah, it's so easy to sit here and say you got to be kind of even keeled, whether it's a win or a loss. It's easy to say that, and we all agree.
Yep.
We want to do our best to just make a win or a loss just a data point on your day. Mm-hmm. It's all part of the bigger scorecard. But as far as the emotions go, there's so much that you need to learn about personal awareness. You need to learn. It's one thing to be upset about a losing trade or to be excited and elated about a winning trade, but you have to have the self-awareness to be able to step outside of yourself and observe that these things are happening to you.
Correct.
And then know how to deal with it from there. I'm guilty as anybody. Like, when I have a big win, I'm jumping around the office and I'm all super excited, and when I have a big loss, I'm out there wanting to kick the dog. It's like, right. I've been there.
Right. And but again, coming back to your point about paper trading and real trading, I think this is the only way that you can get that awareness, is by actually going through the actual feelings and sitting with them in the moment, and knowing that this too shall pass. And really, one of the things I learned from one of my mentors early on at one of the hedge funds I traded for was, the first thing he said to me, like the week before we started, was, hey Matt, what do you read? What kinds of things do you read? What are you reading? Can I make some recommendations? And he said, and I said, I didn't really know where he was leading me with the question, but what he was suggesting is, you're going to have a lot of downtime as a trader. That is the liberty and the freedom that you get from this business, but it's also the reality. And if you don't use that time well to study and or get some healthy diversions away from the market, you can really put yourself into a world of hurt. So I think what both of us are trying to say is, what is good is bad, what is bad is good in this perverse business. And I always like to say that. I had a student here, he was here in February, and at the very end of the week with me, he asked me, he said, wait, you just said something. He goes, so when you get into a position, you expect it to go against you? And I said, absolutely. I said, if you don't give yourself like that, allow yourself to be wrong and still be right in a trade, you'll never make it. And he said, well, what do you mean? I said, well, 80% of my winning trades, easily, and I could bring up years of numbers, 80% of those trades went against me at some point before I took profits.
It's a hard thing for people to wrap their head around.
And he's like, really? I said, yes. And that is why I don't try to put on my full position rarely at any one point. I always like to leave myself. I typically don't get to a full position. That way I don't take my full max stop loss. And you can adjust that based upon volatility of the item you're trading. And you should look at those things, right? Sometimes the S&P is moving more than the NASDAQ, vice versa right now. So you have to figure out like where your opportunities are. and you have to have one way to make money.
Right. Well, Matt, so the other thing I wanted to mention, you asked me, well, what 2 things would I tell my son if he wanted to learn how to trade? And one was, learn all you can, and you talk about paper trading as an option, but whatever. But I think the other thing, and this is something that people don't like to talk about, because the stock market and trading, well, futures market as well, but just trading in general, tends to attract people, and you see this every day, tends to attract people that have a false illusion that this is where you can make a lot of money in a hurry.
Right.
It attracts the get-rich-quick crowd for sure. Mm-hmm. And so you really need to spend some time really coming to terms with why you think you want to be a trader. And you might not have that answer right up front.
Right.
And deeply really think about it. And look, if just because maybe your answer is that, I want to make a lot of money quickly. That's not necessarily a bad thing, but you just have to know that about what you're doing.
Right.
And to kind of hedge against all of that, a hard lesson I've learned this year in my trading career, I've been trading for 19 years. But the hard lesson I've learned this year is that I am not very good at trading when trading is my sole source of income. I've come to the realization that over the last 19 years, between me and my wife, one or both of us has always had a job, had some kind of other source of income. Mm-hmm. So trading for me has always been kind of like a sideline business. I was dedicated to it mostly full time, right. But as far as my income needs went, when trading was good, that was great. That meant we could, afford that more expensive apartment to rent. So we can buy that nicer car. We can go on that extra vacation, things like that. And when trading was bad, for me, it was always like, well, this sucks, but we'll get through it. Our bills are getting paid, mm-hmm. No reason to worry. Mm-hmm. But it wasn't until this year when I left my job at StockTwits at the end of January, I suddenly found myself in a situation where trading was my only source of income. And I naively thought that that's fine. I'll make it. I'm making money. I can do this. But I quickly found out that that introduced a whole new level of stress to me that I did not deal well with. I'm still not really dealing that well with. I need to make it so that trading is not my main source of income. So my advice is my long-winded way of saying, for anybody considering trading, I would spend a lot of time and effort in the early days figuring out a way to have some other source of income, whether it's a part-time job, whether it's investing in some income-producing real estate, whether it's a partner in a friend's business, or, I don't know, there's lots of ways to make money out there, and you just got to figure out some things, hopefully, that, can keep money coming in and get your bills paid because, listen, for every story we hear about a guy who learns how to trade and becomes profitable in the first 6 months of his career, there's 100 other stories of guys or girls who either never made it or took a hell of a lot longer to become.
Yeah, and often I will give students that I'm working with. Can you? I got some reverb here all of a sudden.
Oh, I'm not making any noise.
That's weird. Yeah, it's coming back on my end.
If I turn my volume down, will that help?
Might help. So what I like to tell people is be well capitalized, and if you can't, make sure, to your point, that you can have your rent paid and your basic bills outside of trading, or pay them forward. That way, to your point, you're not really thinking about, I've got to pay rent, I've got to buy groceries.
Yeah, absolutely. And Matt, I think maybe something changed with your internet signal there, because I could hear most of what you just said there, but not all of it.
Yeah. So I'm gonna thank you, Sean, because I don't know what's going on here. I'm gonna thank you. I'm gonna wrap this up. We'll have you on again. Sean McLaughlin. Sean, they can find you on Twitter at Chicago Sean.
At Chicago Sean, that's correct.
That's the best way to find Sean, and we'll have him back on. And we'll talk soon.
All right, man. Thanks. This was fun.
Appreciate it.